How much tax will you pay in the great state of Kentucky on $60,000 of income? That's what we're going to talk about here today at the Heritage Wealth Planning YouTube channel, my friends. So don't forget to subscribe. As always, thumbs up and comments is welcome. So I'm not going to show my face again here because I actually want to show you the website because I think it's actually of interest to look at this. And so what we're going to do is we're going to go to heritagewealthplanning.com. We're going to go to Tax Tools. We're going to go to Interactive Tax Tools. All right. And of course, not just subscribe, but thumbs up and comments as well. Then we're going to go down to not the federal tax interactive tool, which you should use by all means. We're going to go down to Smart Asset. And we're going to go over to Kentucky. Now, Kentucky is one of my top 7, at least it was. They did pass a new tax law last year. I actually think they overrode the veto of Matt Blevins, the governor up there in Kentucky, but they did raise taxes, no other way around that. And Kentucky right there. So let's take a look at what Kentucky looks like for us. And what we're going to do, like we've always done, I haven't done one of these videos for a couple months. I've been falling behind. I keep forgetting, is we're going to take, we're going to say we got 60,000 of total income. All right. And what we're going to do is we're going to do 20,000. Oops. There we go. 40,000 of IRAs and 20,000 of Social Security. And what we have is nothing to the state of Kentucky, nothing. Make sure we don't have any pension. Yeah, no pension there. And everything is 2806 to the feds. All right. Now let's switch these around. 40,000 in IRA and Social Security and 20,000 in an IRA distributions or 401k. So now we got, what is it saying? Blink. We got to click there. What is it saying? 8,000, 6,000. Now we got nothing. So we got nothing, nobody. Nothing to the states, nothing to the Fed. So as you can see, where your income comes from is hugely reflective on what your taxes are in the state of Kentucky. Now people say, why is that? So let's look at this. So what we got to do is we got to figure out provisional income. Provisional income. And that consists of all income plus, what happened? Oops. Oh, I just screwed that up royally, didn't I? All right, let's do this again. I don't know what I just did. Ooh, that was weird. All right, so hold on just a second, my friends. All right, it's working. Okay. That was kind of weird. All right, here we go. So provisional income. It's 1/2 Social Security plus all other income. All right, so that's what we do. And what we have here is Social Security was either 40,000 or 20,000. So if we have 40,000 Social Security, half of that. And so remember, we have Social Security, 40,000, IRA distributions, 20,000. All right, so then what we do is we take half of that, and then we take all of this income right there, $20,000. All right, so our provisional income is, sum these two guys, $40,000. Now remember, married filing jointly, 0 to 32K is you don't owe any. None of your benefit from 0 to 32K is subject to income tax. 32K to 44K, half that amount is. All right, so 50%. So 0.5. So that, plus this right here, all other income. So we have $24,000 of AGI, and we're going to see our standard deduction, we'll just say is $26,600 because we're over the age of 65. All right, so now we go sum, and we're going to sum these two numbers right here. Oops. Sum these three numbers right here, and we have negative taxable income of $26,660. And that'll be your taxable income. All right. So figure out AGI, or AGI is these two numbers right here, 4,000 and 20,000. That's our AGI. So in that case, our AGI is 24,000. We have 26,600 taxable of standard deductions. Our taxable income is negative. Now let's flip these around. So now we got 20,000 in Social Security and 40,000 of IRA distributions. So now half of Social Security is $10,000, and all other income is $40,000. So now I got $50,000 of provisional income. So we go $50,000. The first 32 is not subject to anything. 50,000 means the next 12,000 is that's going to be $12,000, and that's going to be $6,000 right there. And then any amount we got equals. We're going to have this minus that, so $6,000, because we have 44,000 plus is subject up to whatever this amount right here is subject to 85% is subject to income tax. So we take that, we go equals this times 0.85 equals that. So now we got $5,100 of income that's subject to from that third threshold. So now we take these guys right here, we sum them up, equals this plus that equals that, 1,100. We do this equals that, Krakow. And so now we take 11,100 of our total Social Security benefits subject to taxation. So before we only had $4,000 of $40,000 of Social Security subject to taxation. Now we get 11,100 of 20,000 Social Security benefits of subject to taxation. Plus we add this right here, all right, because that's all of our other IRA distributions. I actually probably need to make let me do this. Then we got to say, okay, so now we got to add those up. All right, so that's going to equal this plus this. That's our AGI. Now we got to figure out taxable income, which is, and then we have 26,600 of standard deduction. All right, so now we got to take this, equals that minus that, and our taxable, whoa. Get rid of that guy right there. Point. So our taxable income here is 24,500. All right, now remember the first 19,000 or so. Where's my new tax code? Right here, 2019. The tax brackets are married filing jointly. 19,400 is at 10%. 19,400. We times 0.1. All right, and that's, so we're going to do equals that times that. So we're going to have 1,940 in taxes right there. And then in this case, it's going to be equals, oh man, kill me. I can't see. We're going to do, equals this minus that, which is 5,000, which would be times 0.112, 0.12. And here we have, I think I can just do this, right? Can I? Yeah. All right. So then we times those together and equals that plus that. All right. So here we got 2552 in federal taxes. And that's how it works. Because we had this right here come from Social Security and this only coming from IRA distributions, we pay no tax. When you flip them over, when we have 20,000 come from Social Security and 40,000 coming from IRA distributions, so it changes the mechanism big time. And you'll see right here that we got 2806, the federal taxation. I'm actually showing in my quick calculation 2552. I don't think they've adjusted it with the increase in standard deductions by presumption. Either way, significantly more taxes without any more income, simply because where your income comes from. So that's the state of Kentucky. Kentucky is fine when it comes to taxation. The federal taxes, there's no avoiding, no other way around that, unless you have more from Social Security and less from IRA distributions and other forms of income. So hope you find this helpful, my friends. You can get all these tools at the Heritage Wealth Planning. Go to tax tools, and we got one on state tax tools. We got the federal tax tools, and then we got the state sales tax handbook from salestaxhandbook, I think.com. So as always, you like what you see, subscribe, thumbs up, comments, share the video, and we'll see you next time. Thanks.